Hello everybody. Well, time for a video, and I think this will be kind of it for the day because there's really nothing to talk about except just in really broad terms what's going on. Before I get into that, just a side mention about our new emoticon feature in comments. It's actually the first really new thing we've added to Slope for a very long time. Slope engineering's basically been zeroed out like for the past year because I kind of decided, nobody cares. But comments is so popular that I decided to invest in an improvement. And it's pretty cool, but we're working a couple of kinks out, especially for Slope Mobile right now. So if you're having trouble there, just hang in there. We're aware of a bug or two, and we'll get them fixed up as we always do. But do use it and monkey around with it. And if you find a bug, email me. Do not assume I will see it in comments. Just email me. That's all I ask. All right, let's talk about the market. I didn't think today would be an exciting day, but boy, was it. It was our first good down day in weeks. And this is the ES pretty much from Sunday. You can barely see it on the left side, but we gapped down by about 11 or 12 points. And as it always does, it tried to close the gap. It got to like -7 or 8 on the ES, something like that. And then it began this interesting slide. Mainly because of China, I suppose. We slid and then recovered because everything's always turns out okay in movies, and then we slid again, and then we climbed because everything always turns out okay in movies and the sitcoms, and we went blasting higher here because the cash market opened. And of course that solves all our problems. When the cash market opens, that means our $31 trillion in debt goes away and everything's great. And then so we blasted up here. So there's 1, 2, 3 different times when the bulls tried to take charge. And that was pretty much the peak. Really just a few minutes into the day, that was it for the day. And it was just bzzz, all the rest of the day, except for this last little bar higher, because everything always works out in movies, right? So this persistent optimism keeps rearing its hideous head. But on the whole, it was a nice down day, down about 1.5%, 1.75%, something like that. And this is the 1 minute bar. If we dial it back to the 30-minute bar, we can see that this line I've been obsessed with lately got broken quite handily. If we rally, because of the aforementioned optimism, I suspect this is going to be our new friend here. This is our new ceiling. I would prefer it not go that high, but we've broken the psychologically important 4,000 number. And it seems to me that we've got a nice huge blob of overhead supply here as our ally. So maybe we'll rally, but then of course want to work way lower toward the more important trend line, which is visible. It's even visible here in the 1 hour chart. This of course was a horrendous CPI report that came out, which just killed bears left, right, and sideways. So we're still way, way, way above that. But we need to break this one, which is more plainly seen on the 4 hour bar. Actually, geez, we have to really go out 4 hour, like so. Okay. And so this one is the real monster, because this is anchored to the other. In fact, indeed, these are both anchored to CPI reports. How about that? So this is anchored to that horrible, horrible October 13 event. And this is anchored to that horrible, horrible mid-November event. And so far, this doesn't mean really much of anything, because neither did this. But we need to break this level here to start one of these again, which is really what I want. Looking at the daily chart, you can see here these wiggles and waggles don't count for too much, although just today alone constitutes a pretty impressive bar right here, as you can see. So this is the bear market, like so. It's 1 year old. We have been making a nice series of major lower highs, this being the most recent one. And of course, what we want to see is for this to break and for all holy hell to break loose as we ultimately take out that October 13 low. But it's a long ways off, isn't it? So we're about 500 points above that, and we'll just take it a step at a time. So let's look at some of the index charts. Here's the NASDAQ composite. This is quite weak compared to the likes of the Dow Industrial. We have been noodling around this line for many, many days. The good news is that this bullish breakout has clearly failed. What we need to see is for last week's lows to be taken out. As I've mentioned ad nauseum, I don't want this to become a new version of this, which is a preface to a push higher to this line. Don't want to see that, if you don't mind. But we've got to break these lows from even just a few days ago to negate that possibility. The Hindu, as I mentioned during this weekend, is the freak amongst all these things. 6,000 points based on absolutely nothing except wrong-headed optimism. And we cut above the prior high, so we've wrecked the lower highs. And of course, we've blasted way above this trend line. So this is kind of a big fat mess right now. We aren't that far below lifetime highs. So this is in sharp contrast to like the NASDAQ 100, which is like 30% below all-time highs. But the Hindu has been total freakazoid. Unlike, say, the NASDAQ 100, as you can see here. In this instance, yes, there's been a rally, but it's been quite feeble. I mean, this little notch right here is the entirety of what they've been able to cobble together to take advantage of the cheap, in quotes, tech stocks. And already I'm seeing the wire slathered with articles about what a great bargain Apple and Amazon are. It's going to take years for people to really see clearly, I think. This isn't a very clean top, but at least we've stayed below this dashed line. S&P 100, not a whole lot to say, but it's not a bad looking top. That dashed line does a pretty decent job of hemming in the top pattern, with the exception of that summer rally. Russell 2000, kind of a mess, but we have, unlike the Dow, respected this descending trend line. The SOX is actually pretty cool. The semiconductor index, I've got puts on NVIDIA and on AMD. And this naturally looks awfully like the NDX 100. And the only exception to this top is this little blob right there. Now, the S&P 500. This goes all the way back 123 years. And we zoom in here. And we can see that not only have we respected this line, but we are way below it. We did not threaten breaking that line. We did not break the gap. We did not close the gap. The closest we got was late last week. Your traditional Thanksgiving pop. And then we undid that. So we basically undid Friday, Wednesday, and Tuesday, I guess that is. And didn't close this gap, which is good. Transports, unlike the Dow Industrials, rather clean. You can see what a nice descending channel this is. So this, I think, encapsulates so neatly what we're dealing with here, because on the one hand, in the short term, we've got this strength here, which is what's on everybody's brain, how great the market is, what a bargain it is. So this right here, the past month or so, is what everybody's thinking about, and that's a bullish formation. But this is the more important one. This is quite bearish, but we have not broken this in order to resume this, because what I want to see is the likes of this here, which hasn't started yet, although maybe today was the start. As far as the VIX, I've written more about this than normal lately. We had a nice bounce on this. We got to around 20 or so. But I've talked about the VIX at 20, use the money, VIX 33, time to flee rhyme that I came up with for myself. And we're still way down this range. So there's plenty of room here. Plenty of room. Of course, I know what's going to happen. It's going to get up to 33. I'm going to be a good boy, dump everything, and it'll go to like 70 or something. You just watch. The moment I get the roll on my screen, things will change. You know what? I think that's enough. I'll just show you XOI real quick, because I've got energy stuff, but we don't need to go into that. Pretty cool weakening, I think. But all right, anyway, Monday was a very good day, and I would love to see you December to remember. Let's get it going.